Owners of businesses with unpaid tax liability run the risk of being found personally liable for that tax debt. We're going to talk about a couple of ways to avoid that altogether, and this video starts now. If you want to stop any problem with the IRS, we'll show you our best insider tips, how-to guides, and little-known secrets to get there fast. Before we jump in, go ahead and click that subscribe button so you never miss another video to protect yourself and your bank account from the IRS. Let's go. I'm Anton with Tax Law Offices. This is our YouTube channel. Welcome to another video. Before we get started, I'd love to have you click onto the subscribe button. Be a regular subscriber. Click the bell icon so that you never miss another video as it gets posted. Also, we'd love for you to like the video and let's get started. When companies have unpaid tax liability, the Internal Revenue Service revenue officer will conduct an interview or a series of interviews to determine if anyone else within that company should have personal liability for some part or all of that unpaid payroll tax liability. That process is generally called the Trust Fund Recovery Penalty Determination, and something that a lot of practitioners in this industry just call the 4180 interview. 4180 is the IRS tax form or the IRS form that it's based on. We actually talk about that 4180 interview process in another video, but right now what we should really focus on are ways to avoid that process altogether. All right, so before you jokingly comment, yeah, the best way to avoid that is to just pay your taxes. Make sure your payroll taxes are paid. And in a perfect world, yes, that is obviously the best answer, but it doesn't always work out that way. Business owners with employees know that sometimes meeting that payroll tax expense and liability can be a challenge. So we're talking to those companies that have faced that challenge. In these situations of unpaid payroll tax, IRS will assign that case to a revenue officer, and this officer's responsibility is to very quickly make a determination whether this trust fund recovery penalty, basically it equals the amount of taxes that were withheld from employees' paychecks, whether this trust fund recovery penalty should be assigned to some personal liability for one of the owners or someone else in the business. And believe me, when that revenue officer gets the assignment, he or she is on a very tight time schedule. IRS will encourage that revenue officer to make a determination of whether to assign this trust fund recovery penalty, to make that determination within 120 days of being assigned the case. So you will notice, or anyone who's been through this situation has noticed that that revenue officer seems to be extremely aggressive. Well, that's because he or she only has about 4 months, 120 days to make this determination. And so they are in a very big hurry to make that first contact. And they are encouraged to make the determination immediately after or during that first contact with the taxpayer. IRS procedure actually provides two circumstances where the revenue officer will make a determination, an immediate determination, that they will not even pursue that 4180 interview, that trust fund recovery penalty determination. One of those two situations is when the business is no longer functioning, it's out of business, and no responsible person, no business owner, no person who could be determined responsible can be located. The other circumstance, the other situation is when the business meets the criteria for an in-business trust fund installment agreement. It's actually called an express installment agreement. So that was a lot of words. Let me say it again. An in-business trust fund express installment agreement. And the other criteria is that the IRS has already granted the agreement. Really quick, let's go through the list of items that are the requirements for this in-business trust fund express installment agreement. The unpaid balance must be $25,000 or less. Now, about that $25,000 liability, the balance has to be $25,000 or less before that installment agreement is applied for or is agreed. So anyway, the lesson there is to make sure the liability is paid down to below $25,000 before you apply for the agreement. Other than the unpaid balance being $25,000 or less, the installment agreement must pay down the liability. In most cases, it must pay it down within 24 months or before the tax becomes no longer enforceable. We won't get into that. Suffice to say, in most cases, it has to be paid down within 24 months. So there are three major benefits that I see in having an installment agreement other than avoiding this 4180 interview process altogether. And here are the three benefits. One, and this first one it's actually really important, that the IRS revenue officer, their field employee, they're not required to make a field visit to your business or to your home. It's a big benefit because who really wants to get a visit from an IRS collection enforcement agent? Second, that no financial statement is required from you, which again, the huge benefit is that you don't have to disclose your finances and your entire financial profile, your income, your expenses. You don't have to disclose that to the government. And then third, that a lien notice is not required, meaning that revenue officer does not have to file a public document with your county recorder telling all the world that you have a lien for unpaid payroll taxes. Now keep in mind that IRS revenue officer does still have the discretion on whether to file a lien. He or she will typically do that when it's in the government's best interest. For example, if the taxpayer had recently defaulted on another installment agreement. Once again, those points of having this sort of installment agreement, that the liability is $25,000 or less, that the liability will be paid off within 24 months. And then one other thing that we should also throw in, that it won't include any future tax liability, because basically that would default the installment agreement and you start all over. But do those things, you can avoid this 4180 interview process. You can completely avoid the revenue officer considering whether to hold you personally liable for unpaid payroll tax in your business. That's a win-win. Okay. All right. Again, I'm Anton. Thanks again for joining me on this video. Remember to subscribe to our channel and don't forget to hit the like button. Also hit the bell icon so you stay notified of the next video. Thanks again for joining me, and we'll see you next video.